This building that I proposed developing in an area called Anacostia that had been destroyed by the riots that I remember in 1968, and then I became a part of helping rebuild it. And that project was a 100,000 square foot building. The goal was to kickstart economic development in a predominantly black community and start redevelopment of a black community, and then ignite redevelopment. Today, Homeland Security spent over $5 billion. I built that building in 1980. I delivered it in '89. Today, Homeland Security has a $5 billion campus over there. It's one of the hottest neighborhoods in Washington, D.C., a lot of economic development activity. And that project, though, wasn't easy, though, because he agreed to pre-lease an office building that I proposed developing in an area called Anacostia that had been destroyed by the riots that I remember in 1968. And then I became a part of helping rebuild it. And that project was a 100,000 square foot building. The goal was to kickstart economic development in a predominantly black community and start redevelopment of a black community, and then ignite redevelopment. Today, Homeland Security spent over $5 billion. I built that building in 1980. I delivered it in '89. Today, Homeland Security has a $5 billion campus over there. It's one of the hottest neighborhoods in Washington, D.C., a lot of economic development activity. And that project, though, wasn't easy, though, because I ended up on the front page of the Washington Post, and other people didn't like the fact that Barry had supported someone who was inexperienced like me, and I'd never owned a house, yet alone a building. But I built the building about 9 months early, and that was the beginning of my career. And I would never have been here today if it wasn't for him giving me that opportunity. And that's why I say, we cannot look, every black political leader to knock down these barriers was a target. Dr. King was a target of our own government, by the way. The FBI has never been a friend of black economic empowerment. J. Edgar Hoover ran a racist organization, and that was the culture of the FBI. And they investigated Dr. King, Malcolm X, Medgar Evers, every civil rights leader, including Barry. When Barry was vulnerable, and they got him and embarrassed him, and but he had done some transformative things, and I am an example of that. And so, good question. So first of all, I think one of the reasons why I ended up in a deal where the government was involved is because I could not get a fair chance from the private sector. The D.C. was a majority black city, and there was one black developer in it when I started. And there was a reason for that, because if the floodgates got open, then and more of us walked through those doors, then there'd be no excuse to say, well, why don't we have more black developers? And so the development community has never been hospitable to change. And we can look here in New York City, and which hopefully we'll have a chance to talk a little bit more about later. But there's not one major building, not one skyscraper in New York City owned or developed by someone black. And as far as I know, the only major building south of 110th Street owned by a black developer is mine at 108 Leonard Street. So that tells you that we have an unfair system. So the idea, though, and also the idea in the private sector, to break down some barriers, you got to have a lot of cash to do it. In government, you can have political power, the right, the opportunity to vote, the opportunity collectively to shape, the outcome. And so let's just think about Joe Biden. Joe Biden would be on the porch of his house in Rehoboth Beach, Delaware, looking out at the ocean as a private citizen. It wasn't for black people, especially black women, because black spending trillions of dollars to rebuild our economy, and supposedly the private sector has heard the voices of the protesters and all of us about this quest and our quest for fairness. So the private sector doesn't have those burdens of responsibility. I think they're getting closer to that. So the public sector provides economic opportunities. And so the government does affordable housing by and large. And so my view is that shouldn't affordable housing be reflective of the population demographics of the people who occupy them? And shouldn't the economic benefits from them be reflective of the population demographics? Shouldn't development opportunities in New York City that is 69% of people of color and 53% female, shouldn't those opportunities be distributed reflective of the population demographics? They should be, and they can be, and we have the currency to require that. So that's why I like public-private partnerships. And then on the real estate side, the simplicity of it is that if I want to go and build a tower in Manhattan and the site's worth $500 million. I got to go pay $500 million, and that's and whoever pays the most money is going to win that. Is going to get the right to buy that property from the seller if it's a private seller. The public sector, the government wants other things. They're not land speculators. So normally they want a certain outcome. They want a certain type of building. They want a certain type of use. And in theory, they say now more often they want inclusion of and diversity. And so those are other grading criteria that are not as relevant to dollars. So you can not have to pay as much. The other thing is that you don't pay for the land until you're ready to develop the land. So think about that for a second. Let's use an example. There's a project called 11, X1 right on the High Line. It went into foreclosure, et cetera. And that was developed by HFZ. They paid $1 billion for that site. Took them 3 years to develop that site, to start construction. So the carrying costs were about 20% a year, property taxes, insurance, debt service on the interest and the equity. So that's $200 million a year to carry in that cost, right? So you're starting off with the land actually costing $1.6 billion. Now go up the street to Hudson Yards, and Related has that whole development there. They don't pay until they commence construction on a piece-by-piece basis. They fixed their price back when they got the rights to do it in, I think, 2007. And you know how prices have gone up, so they got this big arbitrage. And then the city and the state gave them a subsidy, apparently, of about $2 billion. And they built a subway station to support that. So there, the developer has made billions of dollars just on the land appreciation and the valuation of the subsidies. And so think about Related, and I hate to pick on them because they're a great company, but think about them as the largest private developer in the United States. Their biggest projects have been public-private partnerships. He started off as a affordable housing tax credit lawyer, then got into building affordable housing himself. Then the AOL Time Warner Center, that was on government land. That was an old New York Coliseum site. And then Hudson Yards, which is going to have a dozen or more buildings, and that was government land. So imagine if I told you, I'm going to sell, we're in a hot market, I'm going to sell you a piece of property that's worth $1 billion. I'm going to sell it to you below market for $700 million, and it's going to take you 3 or 4 years to build the first building, and you don't have to pay me any of the money until then. And there's no interest, and you don't have to pay property taxes, and you don't have to pay any insurance. I'm going to pay all that. Be a great deal, right? You shouldn't, and you have to go out of your way not to make money. So that's the public-private process in a snapshot. So, and the number one is make your money going in. So I gave you a little hint about public-private partnerships. So rumor has it that Hudson Yards, before the pandemic, Related was up $3.5 billion on land value alone, and that gave some resources to buy the Dolphins. So that's what rumor has it. But so imagine now, again, if you control the property, you fix the price, and you go 3 years down the line. Remember the $1 billion asset I told you about, how $200 million a year to carry it. So if the value didn't go up at all, you're up, $600 million if you didn't have to pay that, right? So the public-private deals I like the most because I can control. The price, number one, is not the sole determining factor, and so we have to be smart enough to figure out how to give people something more than price. 2, you pay when you're ready to start putting the land to use, and not before. And 3, you don't take entitlement risk. So I like to make my money going in. So I take risk, but they're very controlled risk. And I like the public-private space because it allows me to make my money on the land value. So historically, throughout my career, I've always looked to make sure that the day I'm committing to the deal, it's profitable, and that I don't have to ride the market up. I'm insulated, and so make your money going in. Look to get the best value. Anyone, well, not anyone, but most people, it doesn't take a lot of ingenuity if you have cash or access to capital to go pay more than anybody else. And in a hot market, that's what you have to do in order to control a piece of property in the private sector. So you got to figure out how to do that. And I do it through public-private projects, or I take entitlement risk. I take more complicated deals and then say, give me time to make your deal uncomplicated and I'll pay you more money. And so that's the number one principle is there. And then the second one is to think big. How to look at things. I mean, one of my most favorite quotes that's been inspirational to me for so long, Robert Kennedy used it a lot. It was, some people see things as they are and they ask why. I dream of things that never were and ask why not. I think your assessment is right. I think we are in a recession. We're seeing it in the statistics to start showing it soon. I think that real estate, if you're in the real estate business, then you can make money in every aspect of it. So I made more money, the most money at the time of our company's history back in the early 1990s when I started buying, because we had a banking and financial crisis and the junk bond crisis and the S&L crisis in the early 90s. I started buying up land in downtown DC, at 20 cents, 10 cents on the dollar. And I was able, I bought one building for $5 million, and then cut a deal with the defaulting tenant to pay off their lease for $1,250,000. So I paid $3,750,000. I ended up holding it for a little while and then converting it. It was an office building, converting it to a Marriott hotel, which I owned for 20 years. And it was in an enterprise zone in downtown DC. So there was no capital gains tax for the first 20 years. I sold it at the end of the 20th year for $130 million. And I put all in, I think I had 20 million in it. So there's always a way, and we made money all along the way too in cash flow. So if you're in the real estate business, there's going to be great buying opportunities. But I think places like New York, the real estate market's pulled back in New York. And overall in the country, while prices have been holding, volume is down for the 4 straight months. So, but all markets aren't created equally. So New York, there's no reason just fundamentally to think about how New York could continue to hold values, right? Because now hold it at the moderate level and at the what would be entry level for luxury in New York, which is a couple $1 million, because it's supply constrained. But going up beyond that, people are going to be much more interest rate sensitive because now the cost of a mortgage is double what it was a year ago. And also less people are living here and people are working remotely. So a place like New York, you'd have to look at certain pockets. But overall, as a market, it's going to pull back. Miami, where they can't build a housing quick enough, they can't build office space. We're doing 2 buildings in office buildings in South Beach because there's not enough office space. And so for King Griffin's going to have, I don't know where he's going to have his employees. I mean, they have to be in an apartment or something. I mean, they'll work remotely because there's no space for them. So that market is going to continue to attract Nashville, the Sun Belt in general. But the cities with strong fundamentals, lower taxes, business friendly, and opportunity for growth and quality of life. And so you're going to see some of those markets. Chicago's in big trouble. DC on the office market is in terrible shape, and because people are working remotely. So all markets, it's important that everybody think about this. Yes, there's a recession. So now there will be a time period, and I think what's going to happen, I think we're going to have an experience very similar to 1979, 1980, when OPEC had an oil embargo against us. Inflation was running out of control, and the Fed was trying to control inflation by raising interest rates. And it put us into a terrible recession. And then Ronald Reagan came in, and as horrible as he was as a president, he was great for business because what he did is he immediately gave tax cuts and pushing interest rates down. So I think we've got 2 years of very painful experiences to happen in many sectors of our economy. And then it'll roll into, by 2025, you'll start seeing some real runs. So, which is how I like to look at real estate. 12 o'clock being the peak, right? Then you want to definitely not be a buyer, at 1 o'clock, 2 o'clock, 3 o'clock, right? Because you're losing money, right? So you want to start buying, though, about 4 o'clock, 4:30. And you want to buy all the way up until like 7, 8 o'clock, 9 o'clock, because you're making money. But you buy. So, but from 12 to 4, you're a student of the market. And then from 9 o'clock, 10 o'clock, depending on when you bought, you're a seller. And if you play it that way, then you can always perpetually be in real estate. And our company, I focused our company on geographic diversification. That's why we are in multiple markets, because while New York may not be moving, Miami's on fire, so we just do more there, or Charlotte is on fire. So, Boston, life science, office market in Boston's struggling, but life sciences is on fire. Big backlog, so we're doing 2 life science buildings. So playing geographic product type diversification and being in the real estate business. So make money when other people are losing money. Happens all the time. And I'll give you a little footnote. Last year, the one group who started the most small businesses of any category were Black women. 30% of all small businesses in the United States in 2021 were started by Black women. Black women get less than 0.2% of venture capital or private equity. So imagine the unfair advantage. The majority of the country are female. The country is becoming more and more diverse. And so yet we don't have this kind of access to capital. So white men receive 98.7% of all capital. Imagine that. Now imagine how unfair that is. And so when you look at that, I said, okay, well, we got to do something about it. So I can do a private equity fund. I've been doing this for a long time. So I said, I'm going to raise a private equity fund, and I'm going to raise it for, minority developers and women. And so initially I was told, one, you can't do that. I got to say it's for emerging developers. And because I can't do it based on race, and I can't do it based on gender. So I said, okay. So I go to these public employee pension systems, like say New York City, for example. Now, I'll give you an idea. New York City, 80% of its workforce is people of color, the government, and over 60% of its workforce is female. And yet they have invested less than 3% of their money in firms run or managed by women and people of color combined. And so I went to them, I went to others. But we think it's too risky to invest in, minority firms, in the small minority firms. And so I have been going around trying to raise this money. I got the state of California teachers gave us a proposal, a term sheet. We've got some proposals from a couple of different banks, but it's been the hardest exercise to raise. It took me 35 days or so to get the commitments to finance, our building in Tribeca. It was $540 million. It took less than a month to get commitments of $3.6 billion for Affirmation Tower. And I'm like, wait a minute, this is George Floyd, the protests, all this, everybody's saying they want to do more. And these public employee pension systems would not commit. New York State says they don't do first-time funds. I said, well, we're not a first-time fund. Our company's been in business for almost 40 years. We've been developing for 36 years. Yeah, but you haven't been a fiduciary, so we can't do that. So we have yet to raise a little tiny $500 million fund. I just told you all, Blackstone raised last month $25 billion for opportunistic. And now the irony is that both the comptroller of the city of New York and the comptroller of the state of New York, Tom DiNapoli, are elected. And no Democrat can win statewide without winning New York City, and no Democrat can win New York City without getting the majority of the black vote. So we need to be more educated about how our capital is deployed. And the irony is, in New York City, again, 80% of the workforce are people of color. And yet we can't get fair access to our own money. So the challenge is access to capital. So if all of you all want to be in a position where one day you can raise your hand like the woman in red, you all need to be engaged in the political process, because it's our money. But yet we can't get access to it, fair access to it. I wouldn't be making this an issue if the 69 trillion was deployed reflective of the population demographics of our country. But it's unfair to have to compete at such an extreme disadvantage. Now, that doesn't mean we give up or have an excuse. I don't look at it as an excuse. I didn't expect it to be harder. My grandparents told me it's going to have to be twice to 3 times as good, and never expect it to be easy. I would have hoped by now it would be easier, but it isn't. So my advice is, don't expect it to be easy. Keep pushing hard and keep fighting and growing your business and being successful, like that 30% of the black women who were starting businesses last year. They didn't give up or quit. They kept going. But at the same hand, we cannot ignore the systemic discrimination when it comes to access to capital. Remember what Dr. King said during the Civil Rights Movement: what good does it do the Negro to desegregate a lunch counter when they